Listen up, when a giant wakes up you don't stand on the tracks, you get on the train, and right now the Chainlink Express is about to leave the station. We're not talking about a minor crypto token. This is the backbone of the decentralized world, the Oracle network connecting real-world data to the blockchain. Chainlink isn't just a coin, it's critical infrastructure, and the big money is finally catching on. Saudi Awwal Bank, with over $100 billion in assets, just partnered with Chainlink. That's a global bank betting its future on this tech. This isn't a speculative partnership, it's a monumental shift. Real-world adoption at a scale we've only dreamed of. Chainlink is no longer a niche player, it's becoming a global technology standard, integrated into the heart of traditional finance. And it's not just one deal. Chainlink is working with giants like UBS and expanding into China's massive market for real-world assets. They're building the very foundation for the next generation of finance. Every time a smart contract needs real-world data, it needs an oracle, and Chainlink is the king. It's the toll booth on the blockchain's information superhighway. Every transaction pays a fee. This isn't just another crypto. Chainlink provides an essential service for the entire ecosystem. Without reliable data, smart contracts are just dumb code. Chainlink is the brain that gives them intelligence. The recent partnerships are earth-shattering validation that the smart money is betting big on Chainlink's long-term dominance. When the smart money moves, you better pay attention. Let's get into the numbers. As of September 19, 2025, Chainlink is trading around $24, right at a massive resistance level, $25. This isn't just any number, it's the wall holding the price back. Breaking through is like smashing down fortress gates. A decisive move above $25 could unleash a torrent of buying pressure. The charts show a classic bull flag. After a strong move up, price consolidates, coiling like a spring. Once that consolidation ends, we often see another explosive move upward. Volume is compressed. The market's holding its breath, waiting for a signal. The relative strength index is at 56. Healthy, not overbought, not oversold. There's room to run. We're holding above a key Fibonacci level at $24.35. That's solid ground, a launch pad for the next ascent. Technicals and fundamentals are perfectly aligned. The derivatives market confirms it. $1.7 billion in open interest, with bullish bets climbing over 50%. Bears are getting nervous. Tightening supply, institutional adoption, and a chart ready to explode. You don't want to be shorting this. The stage is set for a major breakout. $25 is the final boss before the next leg up. If Link breaks through, expect fireworks. The tape tells the tale, don't ignore it. Here's where it gets juicy: supply and demand. Link's supply on exchanges has plummeted to multi-year lows. Whales and long-term believers are buying and locking it away. They're not selling anytime soon. This is a classic supply crunch. When there's less available to buy, even small demand spikes can send prices soaring. It's like a rare collectible. Scarcity drives up the price. Demand from retail and institutions is just heating up. The available supply is shrinking daily. Just yesterday, Chainlink added over 43,000 Link to its reserves, now holding more than 323,000 Link. That's a massive vote of confidence from the team itself. When a company buys its own stock, it's the ultimate bullish signal. This accumulation trend is the silent force that could propel Link to new heights. Smart money is quietly cornering the market, positioning for the inevitable demand surge. Don't be left trying to buy when there's nothing left. Don't just take my word for it, analysts are getting bold. Top minds are putting a $52 price target on Link, right back at its all-time high. They see institutional adoption, supply squeeze, and bullish technicals as a perfect storm. Some are even calling for $180 if we get a true market-wide breakout. In crypto, when an asset with this kind of strength runs, it sprints. The first hurdle is clearing $25. Next stops, $30, then $40, $45. Sellers might take profits, but with this much accumulation, new buyers, especially institutions, could steamroll them. These targets aren't just wishful thinking. They're based on network growth, transaction volume, and value secured by Chainlink. As more real-world assets are tokenized, Link's intrinsic value rises. Analysts are doing the math and adjusting targets upward. They see the tidal wave of value about to hit the blockchain via Chainlink. They're telling you where this is headed before it gets there. Let's zoom out. Macro matters. For 2 years, rising interest rates have weighed on risk assets like crypto. But now, the tide is turning. The Fed just cut rates for the first time since December 2024. Lower rates mean cheaper money, encouraging borrowing, spending, and investing. Investors who played it safe are now hunting for higher returns. Where do they look? Growth assets, technology, and crypto. This rate cut is gasoline on the crypto fire. Optimism and liquidity are flooding back into markets, lifting everything from the S&P 500 to Bitcoin. But investors want quality, not meme coins, but projects with real utility and strong partnerships. Chainlink checks every box and is perfectly positioned to capture this new wave of capital. The fear is fading, replaced by optimism. This is the risk-on environment where Link thrives. Macro headwinds are turning into tailwinds. The Fed's pivot sets the stage for Chainlink's strengths to shine. It's go time. Still need proof the big money's coming? Look at the ETF filings. An ETF is Wall Street's seal of approval, making it easy for traditional investors to get exposure. Now giants like Grayscale and Bitwise are filing for ETFs that include Link. These aren't small players, they're titans responding to massive client demand. They're building on-ramps to bring billions, maybe trillions, into crypto. Approval of a Link-inclusive ETF would be a watershed moment, legitimizing Chainlink as an institutional-grade asset. It would open the floodgates for new capital. Imagine every financial advisor being able to allocate to Chainlink with a click. The potential inflow is staggering. Even the filings themselves are a bullish signal. These firms have done their homework. Institutional demand is no longer a hope, it's reality. Wall Street isn't just knocking, they're about to kick the door down. Let's talk about the next frontier, real-world assets, or RWAs. This is the tokenization of everything: stocks, bonds, real estate, carbon credits. It's the multi-trillion-dollar holy grail, and Chainlink is the key. For any real-world asset to work on a blockchain, it needs real-world data, delivered by Chainlink. The Saudi Awal Bank partnership is a prime example, building robust on-chain financial apps that interact with the real world. Chainlink's cross-chain interoperability protocol lets banks securely transfer tokenized assets across blockchains. This move into RWAs changes Link's valuation model. It's now the foundation for tokenizing the global economy. Every tokenized trade, payout, or price, Chainlink is there, providing secure data and interoperability. The market is starting to price Link as critical infrastructure, not just a speculative asset. This is the transition to a blue-chip technology investment. Chainlink is becoming the backbone of the RWA revolution. I'm bullish on Chainlink, but you need to know your downside. If bears push back from $25, know your support levels, your safety nets. First line of defense, $22.75, where buyers recently stepped in. Watch for a strong bounce here, it's a bullish sign. Next support, the 50-day EMA at $22.44, a key technical indicator. If selling intensifies, the 100-day EMA at $20.34 is the next floor, a potential buying opportunity for long-term investors. A break below that would require a reevaluation, but fundamentals remain strong. Knowing these levels separates savvy investors from gamblers. For me, these are opportunities to add to my position. The path to $50 won't be straight, but knowing your supports gives you confidence to hold and buy the dips. So, is a run to $50 possible for Chainlink? After everything we've seen, it's not just possible, it's becoming probable. We're witnessing Chainlink's transition from speculative asset to blue-chip infrastructure. The world's largest financial institutions are integrating, not just experimenting. Supply is shrinking as believers, and the project itself pulls tokens off the market. Demand is set to explode, supercharged by ETF filings and real-world asset tokenization. When falling supply meets rising demand, the result is explosive. Technicals confirm it, the chart is coiled, ready to break out. The macro environment, with the Fed cutting rates, is providing fuel. Chainlink stands out as a beacon of quality and long-term potential. It's not just a crypto bet, it's a bet on the merging of traditional finance and blockchain. Chainlink is the indispensable bridge, and its value will grow as that bridge gets busier. The journey to $50 won't be smooth, but every sign points up. The question isn't if Chainlink will be core to our financial future, but how big its role will be. Booyah.